What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is September 10th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we've got to talk about what is so far the biggest green candle we've formed on Bitcoin's price as far back here as mid-June, since we've been going through this consolidation phase, or what many people feel might be the bottom for Bitcoin. I want to spend some time to share my candid thoughts. As many of you know, I'm still generally bearish on the market over the long term, and talk a little bit about what might have caused this move up in price. We've got a lot of things to dive into in today's video. Let's go ahead and kick things off. Now, to just start here again and talk about the significance of this candle, as I mentioned before, this is the biggest candle we've seen here, especially to the upside, in multiple months in Bitcoin's price. We haven't had a nice double-digit 10% move to the upside in a very long period of time. Now, of course, if you're including the wick here on candles, then maybe you tell a different story. But generally speaking, from open to close here, this is one of the best moves we've seen so far. Now, I want to emphasize and make it still very clear here that I'm not flipping my tune to being bullish. As you all know, over the past couple days, past couple weeks, we've been talking about the continued sell-off since what we deemed the relief rally. And that has been playing out accurately so far. And we believe that it will continue to play out over the coming weeks and months. But again, that is the longer term perspective. And even in yesterday's video, we talked about the idea of why we don't want to short the market, because there could very well be a short squeeze due to a deviation back in to one of the core channels here for Bitcoin, the consolidation channel from the general resistance range to the general support range. Let me go ahead and play this here. And this is, again, an important point here about why we don't want to go short the market right when everyone's thinking about shorting it. So let's go ahead and play it. And now Bitcoin, the market leader here, is hanging down at the lows of this consolidation channel. Now, again, we have deviated here through the channel, right? So I would not be surprised if we see a short-term breakout here, but I do not see a retest up towards this range anytime in the near future. So one of the key points we drove here in yesterday's video is the idea that we can definitely see some kind of rally towards 22,000. I think we even talked about this in a couple of daily update videos previously, about this idea that there could be a short-term bump up in the market. But it's very important, again, to understand here the dynamics over the longer-term play. Again, if you're looking to build positions just for a short-term trade and make trades off these very short moves in the market, I know 10% sounds like a lot. It definitely is for a daily move, but this is not the kind of returns that I'm looking for to confirm whether or not we're at an end of a bear market. What I'm looking for confirmation of an end of a bear market is that the core indicators that we look for here on the channel are starting to act as support. And if we simply turn on our two key indicators here, the 200 EMA as well as the 200 MA, we can see that right now we've come back into the pocket, but we have not been able to claim support like we had back here in the past, right? Now again, what I want to see, similar to the 2018 bear market and many other bear markets previously, not just in crypto, but also in equities, is that these leading metrics that were serving as resistance over the past couple of months throughout the bear market, as we can see here, since as far back here as April, and even before that as well, during the first portion of the bear market back in November into Q1 of 2022, I essentially would like to see these indicators starting to serve as support. And I can promise you all, chasing bottoms and significant breakouts that come out of at least the temporary bottom in the market is not the way to go about trying to trade and invest. If you're really one of the people, and I think the majority of you here are like myself, you're more long-term swing traders or long-term investors looking to dollar cost average properly. And again, I'm not opposed to doing some slight dollar cost averaging here, but I think that you're going to get a much better deal here, which should be much more aggressive with dollar cost averaging when we get into a lower price range. It's just simply the reality of where we are right now within the global macro perspective. This is not a time to go significantly on to risk assets, but there will definitely be some short-term relief tailwinds in the market where things start to tick up a little bit, provide some great short-term trade opportunities, and I can guarantee you guys, we are taking advantage of those. But much more in the equity space right now, because equity markets are acting a little bit more predictably, and for their weight and size as a market, they're performing a lot better here comparative to Bitcoin. Bitcoin has been neutral, generally speaking, since back here in June during the midst of the capitulation event. Right? You can pick an exact price point, but generally speaking, you can see that many of the relative highs here over the past couple of months, where the points of resistance are right where we are yet again here, right around $21,200. Now, we did get a significant amount of volume across all the exchanges here after we got this deviation, and we did get a significant price breakout here, but I need to explain a little bit about one of the major setups that was playing out here that essentially led to price having this kind of breakout. There was a lot of people out there who had talked about this. I'll be honest, we didn't discuss it too much on the channel, but it was something I was learning about at the time. And it's a movement called the power of three. Now, this is a market structure setup that institutional investors will utilize to build positions. This is something that was rightfully pointed out. I want to give credit where it's due from trader_DAANNL. I'm assuming he's from the Netherlands from that name. But generally speaking, he had talked about a macro setup of accumulation, manipulation, and expansion. This is what's known as the power of three. Essentially speaking, this is one of many market structures, as many of you have probably seen, things like Wyckoff, things like that, that essentially is a way for larger traders who have a more difficult time building sizable positions for a trade, how they enter into the market. Now, I want to make one thing very clear. This doesn't mean that this kind of position is a guarantee of any bottom in the market. It just means that we've likely got a short-term bump up to continue in price. And that played out here. Those people, whoever they are in the market, those market participants, they built their position, and now they are ready to ride the wave here. Now, essentially, the question remains, how big of a wave are they looking to ride here? How far are they looking to go? Well, what they're simply looking to do probably is some kind of short-term trade here. Because now that we're up to $21,000 here, we've got a few key resistance points coming up here that need to be cleared. And unless they're willing to provide the buy-side support there, they're going to have to rely on other market participants. And what in many cases can happen is, as a lot of the positions were built back here during the manipulation phase when there's a lot of sell-side pressure, essentially a lot of their entries are down here in this manipulation phase. And then afterwards, they're able to provide the initial market buy-side pressure to give that first green candle, some of those expansions in price, and then they get to distribute back up at a higher price range as everyone flips from being bearish, where they were back during the manipulation phase, to bullish during the optimistic phase with the expansion of price. And this is exactly, on a shorter time frame, how Wyckoff works. Essentially, you've got the manipulation that's getting people to start selling at the bottom. You're setting up these low patterns here that are essentially getting people fearful. Oh my gosh, this is time to start going short. I'm selling my positions. And then on the other end of the stick, you've also got essentially the institutional investor buying into that manipulation and then eventually giving the initial spark to flip market sentiment and let the market do what it does best. Getting caught 2 steps behind, driving up prices again. But again, I want to emphasize here, as I'm explaining this, this is something that if you're really like the long-term swing trader, like many of you are here on the channel like myself, this doesn't really matter to you at the end of the day. All I'm trying to do is explain why we can't get sidelined by short-term moves in the market. And in fact, I want to go ahead and emphasize a couple big things here. First off here, for Ethereum. While Ethereum has ticked up here, and if we dive into our 4-hour time frame, as you all know that I like to look at personally here, we can see that we're above the 200 EMA and the 200 MA. And this is good to see. We've been able to reclaim this. It's the first time since back here on August 19th that we've gotten back above this level. So we've been able to clear through it as resistance. And the next thing we need to do here is we need to see whether or not it can be made a support. But I have to say here, again, we were talking about this acting as resistance, and I'll give credit where it's due. The bulls have gotten price back above there. But the question remains, will it be able to turn it into support like it did back here in late July of 2022? And will it be able to continue breaking away here and continue maintaining its position as a market leader? Or will this be yet again another deviation that we have to worry about? That's what I'm really concerned about here, as we'll dive into the conversation around altcoins. Now, I do want to talk about altcoins, but I also want to dive a little bit into equities. You guys know we've been watching the broader tune of equity markets. And again, as we can see here, equities have started to tick up here since September 7th. I think this is a big reason why Bitcoin has started to leapfrog as well, as it revisited down to those capitulative lows from back in June. We started to see this technical setup where we had 2 small green candles, the buyers coming in, the institutions taking advantage of this and leading into one of the biggest volume days for Bitcoin we've seen in months. Right? This is very well, again, probably due to the fact of the confidence we've been seeing in equity markets. We had a cross on the RSI. It's definitely looking pretty good for the bulls here in the short term. But the key thing that I want to emphasize, even though it's the same here on the NASDAQ, right, is to see what happens when we get up into this line of resistance. What happens when we come up into those daily moving averages here, right? Again, we got shot down. We had a clear deviation here, major sell. Fed made it very clear that they're not going to be pivoting monetary policy anytime soon. So we can't get too extremely confident off of a couple days of green. I would much rather wait. And again, if you guys really want to hear my thesis here, let's say that I'm completely wrong on this, and I make this completely wrong call. I'm willing to accept that. Every trader should be willing to accept that they're going to get something wrong at some point. I would want to rather wait until we get above this line and make it support and start to really have a breakout here if this is really going to be the end of the bear market, both for equities and crypto. I would much rather wait for that and buy in at a higher price, because for me, I don't care what I'm going to make over the next couple of days. I'm not in a rush to make any positions. What I worry about here is that what I can get wrong here, essentially. If I start buying here and it deviates again, starts rolling over, right? If I buy in at a higher price here, so what? Buying a couple percentage points higher, and then you ride the wave of the next bull market, knowing with pretty solid confidence that the setup is good. I'd rather wait for that. That's what smart traders do. They wait for trend confirmations. They don't worry about getting in and picking absolute bottoms. And they don't chase bottoms as well. They chase euphoria. They chase 52-week highs. They chase the optimism in the market that's going to drive prices higher and signify that the bulls are in charge. Now, and along with that as well, just to kind of signify again my kind of status on things, am I overall bearish, my short on positions? I'll be honest with you guys and give you a little bit of perspective as to where I am right now. I'm mainly in cash right now, right? We've been in cash for the past couple of weeks here, really probably about a month or two now. We sent out the alerts in our trade group when we started to unload a lot of our crypto positions back during the relief rally in August, and we've been sitting in cash since. But we have, in the Dash report, sent out a lot of different trade alerts, or at least within the newsletter, we talked about 3 key stock plays that we had, one of them being short, and 2 of them being potential long plays. And one of our plays, which we just said is a general entry, is already up 21% here since we sent out the newsletter back about 10 days ago. So if you guys are interested to see the kind of stock plays that we're watching, what our general perspective is on the macro market, you guys can check out the link down below in the description. The Dash Report is a great community of over 1,000 different participants from across the globe. It's a great discussion group you can join. You get my trade alerts. You guys are able to get the monthly newsletter that drops my thoughts on crypto, on equities, on Forex and commodities, and generally just provides my outlook on where the opportunity is in the market, as well as our perspective on altcoins, all kinds of stuff. And along with that as well, you guys will get some private daily update, market update videos, as well as the mid-month webinar where we go through our thoughts, which will be coming up here later on, probably early next week. But I digress. If you guys want to check that out, check out the link down below in the description. It's 20% off on an annual subscription, so save some money there on that. But I wanted to go ahead and take a look at one final piece here, which is around the altcoin market here. Now again, talking about this point here, I'm not getting caught up in short-term euphoria. This is the biggest telltale sign to me that this is going to be short-lived. We know that the market leader here has been Ethereum, right? Ethereum has been leading the way forward, and on top of that, general altcoin dominance has just been holding up pretty nicely here, especially considering how long time-wise we progressed within this bear market. But I want to go ahead and point towards a very important reality that we need to face here. And that is that while Ethereum did move up in dollar terms with Bitcoin, it did not move up 10%. And in fact, it underperformed against Bitcoin at the moment where it needed to step up to the plate. If we take a look here at the daily time frame, go ahead and escape out of the RSI, we had a major decline, probably one of the biggest declines we've had since back here in May of 2022 for altcoins. A 2.4% drop in altcoin dominance, mainly led from a decline in performance for Ethereum. Did most altcoins and Ethereum go up in dollar terms? Sure, they went up a little bit, but they're not leading the way forward. And especially, they're not leading the way forward right when we finally got to new highs here for altcoin dominance, where we really should have seen the follow through here. If people are really getting excited about the merge, they should be continuing to pay a premium for Ethereum. What in reality this tells me is that not only in dollar terms is it still at a lower high, but along with that as well, it is not keeping up here. The euphoria should be at its peak here. or we're starting to see a trend divergence, starting to see a weakness in the trend where things are going to start to change. And as you all know, with deviations, we talk about here on the channel, for those of you who watch religiously on the DataDash channel, once we break through these lines of resistance or lines of support, depends on which side of the equation we're talking about, right? In this case, when we break back down below lines of resistance that have been broken, that's a deviation. That means we are heading lower to a previous significant range. That either means down to previous lines of support or potentially back down here to the lows here. And again, I want to emphasize what we talked about in our previous video, how we've still got likely a lot more pain to go for altcoins. Plain and simple, guys. Now, all the while, we do expect more pain to come for altcoins here in the coming future. We're definitely looking for plays out there that are fundamentally exciting in this market. The ones that are building during the bear market. There are a lot of layer 1 players out there, as well as DeFi protocols, that are really starting to shine and are continuing to sit on my radar personally. Now, there aren't many, but there are a few out there that I'm actually genuinely excited about in the way that they're approaching the market and what kind of USPs they offer. And we will be looking for entries into those plays as time progresses. But for now, we have to find those different plays in the market. And one of them that I'm very excited about is Kava Network. Now, you guys, if you watch the channel frequently, you guys know that I'm a big fan of Kava Network, and they've had a really big announcement that just came out as they've been continuing to expand their ecosystem through the Kava Rise program, which helps reward developers who deploy applications on the protocol and bring in TVL. They have brought on Curve Finance. Now, this is one of the biggest DeFi protocols out there. For those of you who don't know what Curve Finance is, think of it essentially as Uniswap is to an exchange for a decentralized exchange or an automated market maker for various altcoins, to maybe stablecoins or Ethereum. Curve is a deep liquidity pool that allows you to swap from one stablecoin to another to essentially be able to get really deep liquidity, low degrees of slippage, and be able to switch into a variety of other stable, liquid stablecoins in the market. It already has over $5 billion in TVL across its various deployments on different networks. And with this launch of coming on to the Kava network, this is going to allow for a lot of stablecoin liquidity to comfortably come over into the Kava ecosystem. The reason why is because with Curve being deployed, it's not only a reputable name, but outside of that as well, this is going to allow for a lot more liquidity to come over, for LPs to come into the protocol, and this is going to, again, make it more comfortable to interact within the DeFi ecosystem for the Kava network. Having that deep liquidity available to switch from one stablecoin to another to interact with various other DeFi protocols. So this is really, really exciting stuff here. And this is, again, not only going to be beneficial for Curve coming into the protocol, but also be a huge net win for the Kava ecosystem. It's one of the highest APY pools that you can get for Curve, as you're going to be earning up to 115% in Kava rewards on any USDC, USDT, and DAI that you deploy, plus the also rewards that you'll earn within the network itself. So if you guys haven't toyed around with Curve, I mean, like, again, I think it's just really exciting. You can imagine, imagine, as many of us have to, us doing a $10 million swap of DAI to USDC, only incurring about $1,000 worth of slippage in the entire $10 million trade. That's about as best as you can get it. That's better than, in many cases, traditional markets. So this is, again, where DeFi really starts to shine here, when you can really start to tap into deep liquidity. And it's a very simple protocol, but it's one that's really, really exciting here for the future potential here of Kava's network as it continues to grow throughout this bear market. They're continuing to build, they're continuing to get developers onboarded, and this is the kind of winning strategy that's going to help it stand out long term. Which, again, Ethereum and many other more established networks are going to have to continue to compete against. They're going to have to, again, encourage developers to come onto the network to some degree. Kava's got a major incentive program, and I think this is, again, going to position them well come time for the next bull market, which is why they're on our radar alongside Radix and many other exciting layer 1 plays that we've got here on the channel. But that being said, everyone, I'm curious to hear what you all think about what we talked about here today. Again, just to kind of wrap up here, kind of give a too long did not read version. If you guys want my thoughts on the Bitcoin price here, where things are going, there could very well be a chance here that we come up, as we talked about in previous daily updates, to the previous line of ascending support, turn that into resistance, get shot down, and again continue the sell-off here. Don't take my drawings as absolute gospel, but we do believe essentially that even if we get a couple days of upside here, we might get some euphoria going into that release of the merge for Ethereum. We are still betting here on the grand scheme of things that we've got lower prices to go. And that any kind of returns that people are making here in this market, as we've seen time and time again, any kind of returns that traders are making here, they're taking profits. There's still someone selling here around these ranges, right? And until that starts to change, until we get zooming out here and we start to see clear confidence in price of higher lows and higher highs here, right? Until then, we are not looking to make any crazy bets here in the market, especially considering the macro conditions we're in. If we are going to get a 40, 50, 60% bear market in equities, what is that going to look like for crypto? It can't be anything good, to be honest. Until we start seeing a deviation of the trend, maybe Bitcoin and crypto starts to break off away from the trend. Surprise everyone, crypto has done that before, and I'm open to that. But I need to see some signs of confidence before I start to ride that rodeo. I need to sit back in my cash position and wait for the market to tell me that it's ready to lead the way forward. That's what any good trader would do. And I hope that if anything, this video has provided value for you guys. If you liked it, drop a like, consider subscribing if you haven't joined the DataDash family. But until the next video, everyone, I hope you have a wonderful rest of your weekend. Consider checking out Kava or joining into the Dash Report. Great ways to support the channel. Until the next video, I'll see you all in the next one. Take care, everyone.